In a not-so-distant future, where interest rates don't just influence economies, but determine your very right to breathe clean air, one young woman stands at the threshold between survival and sacrifice. Interest Rate Story. A fictional warning is a dystopian tale that mirrors the financial struggles many face today, magnifying them into a world where credit scores are visible, inherited debt is destiny, and opportunity is no longer a right, but a luxury. This story follows Elena, a bright, determined young woman who has spent her life climbing the economic ladder rung by rung, only to discover that success comes at the price of separation. As she faces a life-altering decision, we are reminded of the very real pressures of financial systems. Through Elena's journey, this narrative sheds light on economic inequality, generational debt, and the emotional cost of chasing a better life. It's not just a story of numbers. Slow, sweeping drone shots glide across Nova Lumen in the year 2100. The city stretches wide, split into two realities. On one side, gleaming skyscrapers tower over lush vertical gardens, their walls alive with vines and smart solar panels. Sunlight reflects off transparent walkways linking rooftop farms, and people stroll freely, no masks needed, smiling under a clear blue sky. The drone moves onward, across an invisible line where the atmosphere changes. Streets below turn cracked and broken. Asphalt peels away into patches of dirt and debris. Buildings sag under years of neglect, their walls covered with faded graffiti. Some graffiti reads like desperate prayers, lower the rates. Oxygen is freedom. And one huge mural in blood-red letters, interest rates equals destiny. Masked figures shuffle along narrow streets, carrying oxygen canisters on their backs. Children play with makeshift toys near abandoned factories, their laughter muffled by protective masks. Above them, giant holographic screens flash announcements, new interest ratings released. Prepare for annual relocation. The camera dips lower, following a masked woman, her movements cautious but determined. She clutches a small device, a wearable application, glowing softly with numbers that seem to decide her worth. In Nova Lumen, your life path is no longer determined by dreams, talent, or even hard work alone. It is shaped by something both invisible and powerful, the interest rate. The Almeida family had witnessed Nova Lumen rise, from its post-war reconstruction days into a towering, hyper-efficient metropolis, a city where every aspect of life was subtly shaped by the ebb and flow of interest rates set by distant central banks. For 3 generations, the Almeidas bore the invisible scars of those decisions. Maria, the elderly matriarch, still remembered the warmth of her small textile shop. In the 2060s, she had proudly employed neighborhood women and stitched handmade goods that were once treasured across the community. But then the global lending rate spiked after a financial panic abroad. Her business loans, modest at first, became unbearable. With variable interest rates climbing above 12%, monthly repayments devoured her income. She shut the shop down in 2071, closing a dream and planting the seed of caution in her son, Roberto. Roberto had sworn not to follow the same path. Instead, he focused on education, believing knowledge would shield him from the cycles of poverty. But engineering school came with a price. Tuition fees had skyrocketed during a period of aggressive monetary tightening. Roberto took out loans just to stay in class. By the time he graduated in 2085, interest rates had risen again, and his student debt had nearly doubled. The burden weighed on his future, limiting job choices and delaying his ability to start a family. Now, decades later, his children, Elena, 24, and Matteo, 22, lived in a new world. One more technologically advanced, but no less constrained. On their wrists glowed the Ratlink, a sleek wearable that displayed each person's interest rate rating. This digit, updated in real time, was a composite score of personal credit history, generational debt, and the prevailing central bank rates. It didn't just indicate what loan you could get, it shaped your entire socioeconomic trajectory. Elena's glowing 4.8 meant she could apply to live in mid-tier zones, access decent preventive healthcare, and qualify for entry-level business credit. Matteo's 5.7, thanks to cautious spending and a part-time government scholarship, gave him more options, including reduced transport fares and eligibility for a clean air district. But Roberto, carrying the compounded burden of his and his mother's debt history, showed a flickering 3.2. Despite years of steady work and no defaults, his rating kept him tethered to high-risk zones with poor infrastructure and limited access to city resources. His number was more than a statistic, it was a reminder that past financial decisions cast long shadows, often beyond the reach of individual will. As the Almeida family sat in their modest apartment, a clean but cramped space filled with framed diplomas, faded photos, and a long discolored certificate of small business excellence from 2081. Their different numbers silently defined the tensions between them. Each family member understood that opportunity wasn't simply earned, it was priced. They were not alone. In Nova Lumen, everyone lived in the margins of a number, and that number was determined, in part, by interest rates whispered into existence by unseen hands in glass towers far away. In Nova Lumen, the cost of money, the interest, wasn't just a financial metric whispered in stock exchanges or corporate boardrooms. It was a living force, woven into the very fabric of society. It decided futures. It carved destinies. It seeped into daily life with an invisible, relentless weight, determining how much food you could afford this week, whether you could repair the broken solar panel that powered your tiny apartment, or even if you dared to dream of a better life for your children. For the Almeida family, like millions of others, interest was not theoretical. It had names, memories, and wounds. Maria, the family's matriarch, had seen her small textile shop disappear under the pressure of rising rates during a global panic. Her son Roberto, despite earning a degree in engineering, was never free from the financial gravity that came from years of student loans. By the time he graduated, his interest rate had tripled, turning manageable debt into a lifetime sentence. Now, the new generation lived in the shadow of those numbers. Elena, full of ambition and talent, dreamed of becoming a climate engineer. She imagined reforesting biozones, restoring coastal resilience, and designing decentralized solar grids for poorer districts. But her Ratlink, a wearable that glowed with each citizen's personal interest score, followed her like a ghost. A 4.8 might have seemed acceptable to an outsider, but in Nova Lumen, it marked her as a moderate risk. Not good enough for full scholarship access, not low enough for favorable loan conditions. Matteo, younger but just as determined, envisioned opening a green tech store. He wanted to bring affordable smart composters and algae-powered lamps to the community. Yet with a 5.7 glowing on his wrist, the city's algorithm saw him as a gamble, too high risk for a starter loan. Denied permits in high-opportunity districts. Every decision, renting an apartment, buying a second-hand solar battery, even signing up for a job training program, was filtered through the cost of borrowing. And worse still, these rates were inherited, shaped by a past none of them had chosen. Because Maria had defaulted in the 2070s, because Roberto had carried student debt until his 50s, Elena and Matteo carried a digital legacy of distrust in the eyes of the system. In Nova Lumen, money wasn't just currency, it was history, it was identity, and it followed you, interest first, future second. Rising rates meant fewer families could afford to live in the healthier eco-zones. These districts, designed with dense vertical gardens, advanced filtration domes, and low-emission infrastructure, were supposed to be the pride of Nova Lumen, but they had become gated paradises for the rate-privileged. Over time, neighborhoods without investment began to visibly crumble. Streets cracked. Shared air purifiers, once maintained by city grants, broke down. Water systems delivered an uneven supply, sometimes tainted, sometimes dry. The algae-powered lighting dimmed permanently in some alleys. Residents grew sicker, respiratory illnesses rose, mental health worsened, and life expectancy dropped by nearly a decade compared to the wealthier zones. A brutal new policy was introduced. The city council, under pressure from the Global Lenders Consortium, rolled out relocation credits, a lifeline that came with a catch. Only one person per low-income family could apply to move to the oxygen-rich zones, and only if their Ratlink showed an interest rating below 4.5. These credits were non-transferable, and once used, excluded all other family members from reapplying for 10 years. For the Almeida family, the decision struck deep. Maria's dreams had faded under the weight of soaring loans. Roberto's years of sacrifice and study had left him with a 3.2, but his health, after years in polluted districts, was failing. Elena, bright and determined, held a 4.8, too high for eligibility. Matteo's 5.7 was even worse, punished by the algorithm for his small business aspirations. The irony was cruel. They had done everything right by the old rules, studied, worked, dreamed modestly. Yet decades of systemic bias, missed payments during recessions, predatory loans, and unpredictable inflation had solidified into a single, suffocating number on their wrists. Now, with one shot at salvation, they faced an impossible choice: who would get to breathe freely, and who would be left behind to inhale the cost of their ancestors' debt. In a home once filled with laughter and stitching machines, The Almeida family gathered around a cracked digital table. Their future wasn't shaped by opportunity or effort. It was negotiated by numbers, by algorithms, by the lingering ghosts of interest. Old resentments, long buried beneath years of mutual sacrifice and quiet endurance, began to stir and take form. The Almeida family, once united by shared hardship, found themselves fractured by an invisible algorithm, one that now threatened to decide their fates. Maria sat in silence, her eyes fixed on the flickering display of her worn-out Ratlink device. It pulsed a cold red, 6.1. Her mind drifted back to her 20s, the unpaid medical bill when her mother fell ill, the missed credit card payments when she lost her factory job. Those decisions, made in desperation, now haunted the next generation. The guilt pressed on her like weightless iron, invisible yet unbearable. Roberto, her husband, hunched forward at the cracked digital kitchen table, his calloused hands gripping a mug of cold tea. He had given up a promising career in design to work double shifts at the carbon scrubbing plant, all to keep the family afloat through the Great Adjustment. His Ratlink showed 5.9. Not enough. Never enough. And now, watching his children argue, his sense of failure burned more than any exhaustion ever had. Elena's eyes were sharp and tired all at once. She had always carried the hope of the family, top of her class, eager to study climate engineering, to help restore the damaged bioregions. Her Ratlink showed 4.4. Just low enough. Barely. She tried to stay calm, to explain that getting into the training program might open doors, eventually allowing her to lift them all out of the crumbling breathing zone. But Mateo wouldn't have it. We don't need hope for tomorrow, he snapped, standing. We need survival now. His Ratlink read 4.8, close, but not close enough. He had hustled hard, working odd jobs, building contacts, learning the ins and outs of green tech resale. He had a business plan ready, one that could bring in money fast if only he could access the Oxygen Zone's client base. For him, the relocation credit wasn't a dream, it was a tool. Their voices rose. Pain sharpened their words. Blame, fear, and frustration spilled out. For the first time, they weren't fighting the system that held them back, they were turning against each other. And all the while, the Ratlink devices blinked softly from their wrists, measuring, calculating, not compassion, not love, not potential. Only probability, risk, reward. And in doing so, they silently redefined what it meant to be a family. In the past, hard work and education could lift a family to better lives. A diploma on the wall or a few extra hours at the factory could mean a step up, a better home, safer streets, a future where dreams had a fair chance. But in Nova Lumen's new era, that ladder had splintered. Interest rates acted like invisible fences. They didn't just determine the cost of money, they shaped access to everything: housing, education, even breathable air. The numbers calculated your future long before you had a chance to shape it yourself. Opportunities shrank. The dream of upward mobility faded into a memory, replaced by a system that turned every risk into a sentence. One missed payment became a permanent marker. A low credit rating passed from one generation to the next like a genetic flaw. And one decision, a bad loan, a desperate gamble, made by a family ancestor now echoed down through time, trapping descendants in environments where even clean air became a privilege. Children were born with Ratlink bands on their wrists, glowing softly as they aged, not measuring their growth or hopes, but their financial risk. Those with low ratings were funneled into overcrowded, crumbling zones, where filters coughed and the air grew thick. The lucky few, those born into higher-rated bloodlines, glided upward into glass towers, green rooftops, and zones with fresh air and futures that expanded. As Nova Lumen marched proudly into its technological future, drones buzzing, bio-towers growing, data streaming, fewer people had the freedom to follow. Innovation thrived, but it floated above a sea of static lives. The city glittered, but its foundation rested on a rigid system of numbers, one that forgot humanity in pursuit of calculated order. And in homes like the Almeidas, the cost wasn't just economic, it was generational silence, broken dreams, and the quiet fear that nothing would ever change. Not everyone suffered. Some, like Dario, thrived, not through luck or effort alone, but through a silent inheritance, clean financial records, unblemished credit histories, and generational advantage. His grandparents had been bankers during the golden years of low interest, when housing was cheap, capital was fluid, and climbing the ladder meant simply showing up and trying. They accumulated wealth quietly, methodically, then passed down not only assets, but a spotless credit trail that followed Dario like a guardian angel. By the time he came of age, The world had changed, interest rates surged, mobility slowed, and access to basic opportunities became gated behind metrics and models. But Dario didn't feel it. He bought his first property with barely a blink. He graduated from the finest schools with zero debt, then launched ventures into the booming tech space. One of his most profitable investments, Ratlink, the very wearable device that now controlled the fate of millions. While others scrambled to lower their risk scores, just enough to breathe clean air, Dario watched from his sleek penthouse in the oxygen-rich zone, sipping nitrate-free coffee and scanning performance dashboards. To him, the system wasn't broken, it was elegant, predictable, profitable. He saw the rising interest rates not as barriers, but as filters, separating the disciplined from the desperate, the prepared from the reckless. And he never once questioned how many of those caught on the wrong side were simply born into disadvantage. For Dario, the future was limitless, precisely because so many others were kept in place. One signature, one approval. That's all it would take. Elena stood motionless before the relocation council, the soft hum of her Ratlink echoing in her ears like a ticking clock. A number, cold, impersonal, pulsed on her wrist, determining whether she would be granted access to the healthy zone. Just meters away stood the promise of breathable air, safe housing, and an education program that could launch her into climate engineering, her dream, her purpose. But behind her, far across the district divide, her family watched from a flickering screen in their cramped, dust-ridden apartment. Matteo leaned forward, jaw clenched. Maria wiped her hands nervously on a kitchen towel stained with years of wear. Oxygen masks, once a rare precaution, now hung permanently by the door, a silent reminder of the toxic air that seeped through their neighborhood. Elena's heart beat faster. This decision wasn't just about survival. It was about legacy, sacrifice, and the unbearable weight of choosing oneself over one's blood. Her Ratlink showed she was eligible. Barely. She had spent years studying, staying out of debt, keeping her digital record clean, all while watching others fall behind. Every scholarship she won, every job she took, was another brick in a ladder built for one. But now, as she stood on the edge of possibility, the cost came into sharp focus. To cross into the healthy zone was to leave them behind. For Elena, this wasn't just a physical relocation, it was an emotional amputation. The system didn't just measure interest rates, it measured worth. It commodified love, repackaged ambition, and forced people to choose between connection and opportunity. As she hesitated, the harsh truth settled over her, like a second skin. In a world governed by credit history and inherited advantage, love alone could not guarantee survival. The invisible hand of economics had reached into the most sacred space, the family, and split it open, demanding efficiency over emotion, policy over people. It was no longer about who deserved a better life. It was about who could afford to leave and who would remain behind to carry the weight of past generations' decisions. And for Elena, the future, so long imagined as a collective dream, now stood before her as a solitary path. In today's economy, your credit score is your passport to opportunity. It reflects your ability to manage risk from lenders' perspectives, but it also speaks volumes about your past decisions, the stability of your income, and your relationship with debt. Here's how you can begin protecting and building your financial future. Know your credit score and understand what affects it. In most countries, your score is based on payment history, 35%, credit utilization, 30%, credit age, 15%, new credit, 10%, credit mix, 10%. Regularly check your score using tools like AOLCreditReport.com, US, or your country's local credit bureau. Pay your debts on time, always. Even one late payment can stay on your report for up to 7 years. Setting up auto-pay or payment reminders helps prevent accidental slips. Limit your credit utilization. Try to keep your credit use below 30% of your total available credit. If you're consistently maxing out your credit cards, lenders may see you as a risk, even if you pay on time. Avoid unnecessary debt. Ask yourself, is this debt productive or destructive? Student loans, mortgages, or investments in a small business can build your future. Impulse spending with high-interest credit cards often does the opposite. Build an emergency fund. Life happens, and interest rates won't wait. Having 3-6 months of expenses saved can keep you from falling into the debt cycle during crises. Be cautious with co-signing or shared accounts. Someone else's poor habits can impact your credit report and financial safety. Help wisely. Follow local financial education resources. Attend free budgeting workshops, or explore online platforms like NerdWallet, Investopedia, or your country's Ministry of Finance. Remember, Your financial story is not just about money, it's about power, freedom, and the future you can build. Even if your past includes mistakes or struggle, every wise decision today plants a seed for tomorrow. Build slowly, stay informed, teach your children, and above all, protect your financial health as fiercely as your physical well-being. The future isn't just technological, it's financial, and it's deeply human. What happens when central banks raise interest rates? Borrowing gets more expensive. When a central bank, like the Federal Reserve in the US, or the European Central Bank in the Eurozone, raises interest rates, it's making it more expensive for commercial banks to borrow money. Those banks, in turn, pass that cost on to consumers and businesses. This means that everything tied to borrowing becomes pricier. Credit card rates go up, mortgage payments increase, auto loans become costlier, and even business loans grow more expensive. As a result, people and companies tend to borrow less and spend more cautiously. This reduced spending helps slow down inflation, which is often the central bank's goal, but it can also lead to slower economic growth and job creation. It's a balancing act. Raising rates can cool an overheating economy, but it can also put more pressure on families, especially those with existing debt or low incomes. How would you protect your financial future and your family in a rate-based world?